Hello everyone, welcome back to my channel. When we talk about Zimbabwe's currency developments in the IQD Iraqi Dinar investment community, it may seem unusual at first glance. After all, most IQD investors are mainly focused on Iraq's currency, so why the interest in Zimbabwe? The answer lies in the parallels between Zimbabwe's and Iraq's economic and currency journeys, as well as the potential insights that Zimbabwe's actions might offer on how Iraq could approach a future revaluation, float, or digital currency. Historically, both Zimbabwe and Iraq had relatively strong currencies. For Zimbabwe, it once took only $1.47 to make one Zimbabwe dollar. Similarly, before 2003, Iraq's currency traded at over 3 IQD to $1, and however, due to economic hardship, war, and sanctions, both nations faced significant financial crises, leading to steep currency devaluation. For Zimbabwe, this meant a period of hyperinflation, where its currency lost nearly all of its value, eventually forcing it to switch to the US dollar and other foreign currencies for everyday transactions. Iraq, on the other hand, faced sanctions and economic isolation, which caused a significant devaluation of the IQD. Now, Zimbabwe has taken steps toward economic recovery and has ambitious plans for its currency. With its abundant natural resources, particularly gold, Zimbabwe intends to launch a gold-backed currency that will trade on the Forex market. This move is groundbreaking and could create a template for other countries with valuable natural resources like Iraq to back their currency with something tangible. Zimbabwe's approach is essentially a modern-day gold standard, which can offer investors a certain level of security. When backed by gold, the value of a currency may be perceived as more stable and less prone to inflationary pressures compared to fiat money. For IQD investors, the idea of a resource-backed currency, similar to how Iraq's wealth lies in oil, is an exciting prospect. Iraq has vast oil reserves, and if it were to explore a similar path, there's potential for the dinar to increase in value, supported by its own valuable resources. Another important aspect to watch with Zimbabwe's currency move is its approach to international trading platforms like Forex. For any currency, trading on Forex opens it to global markets, which can drive demand and potentially impact its value. If Zimbabwe's gold-backed currency does indeed start trading on Forex, it could provide a real-world example of how a developing nation with substantial natural resources can regain control over its currency's stability and global exchangeability. For Iraq, where there is significant debate about the potential for a revaluation, a currency float, or even a switch to a central bank digital currency, CBDC, Zimbabwe's experience may offer critical lessons. Zimbabwe's move could also pave the way for a resurgence of faith in currencies from resource-rich developing nations. The idea that Iraq could use its oil resources to back the IQD would be groundbreaking. However, such a path would require Iraq's government and central bank to stabilize its financial system and create economic policies that support a stronger currency. While Zimbabwe's approach is inspiring, it's worth noting that Iraq's oil-based economy has its own complexities. The Iraqi dinar revaluation, if it happens, may require a broader approach, potentially involving economic diversification and structural reforms in addition to currency backing. In summary, Zimbabwe's developments in currency management give IQD investors hope. The country's strategy of leveraging its gold resources to restore currency value could inspire Iraq to explore similar options. If Iraq were to adopt a gold-backed or resource-backed currency, or revalue and float its currency while carefully managing its oil revenue, it could lead to a strengthened dinar in global markets. Zimbabwe's journey serves as a case study, reminding us that, while currency revaluation is complex, countries with abundant natural resources have unique opportunities to reshape their currency's value.